Nothing we say is investment advice. Please pause on all 3 pages of this disclaimer and read it. Greetings, Algo artisans. Nick here. It is August the 24th. It's about 2:30 p.m. EST, and we're going to take a look at some possible trades coming up this week on the NASDAQ, Bitcoin, USDCAD, EURUSD, AUDUSD, gold, and silver. Before we get into that, take a look at the description. There is a free algo in there. It's a very short video where I build an algo before your very eyes, and I show you the tools that traders use to connect that algo to their broker so it can trade for them when they're not even sitting at the computer. They might be golfing, sleeping, who knows what. Of course, you cannot just sit there, plug it in, and trade it. You have to learn how to optimize that, which we teach over at algofactory.tech. Also, please like and subscribe. That helps us out a lot. Before we get into the charts, we're going to take a look at the economic data that's coming out this week that can affect the charts in these trades, and that's over at forexfactory.com. Okay, so Monday is basically over. Not a lot of news coming out Tuesday until 9:30 p.m. The Aussie CPI data comes out, and that is an inflation metric that can affect the Aussie currency or any of their stocks down under. Wednesday, we have at 8:30 a.m. EST the US PCE. That is a separate inflation metric to the CPI that can affect any US market. And at the same time, we're going to see the prelim GDP quarter over quarter. So that could be exciting for the markets Wednesday morning, 8:30 a.m. Be careful trading anything US related or anything at all around the world. Thursday, not a ton of news. Friday, we do have 8:30 a.m. EST. The Canadian GDP comes out, which can affect the loonie. And then you have the 10 a.m. Fed Chairman Warsh speaks and some other data coming out about payrolls. There's some revision happening there, and it's Jackson Hole. So Friday might be tricky to trade. It is day 2 of the Jackson Hole Symposium, so stuff might happen on Thursday that might be a little unpredictable, but they don't have it marked as a heavy impact event. So Thursday's probably okay to trade. I would just make sure I'm keeping my stops pretty tight in that day, which I do in general anyway. Let's move on to the charts. We'll start with the NASDAQ. NASDAQ moving down. We had an exciting week a couple weeks ago, and then you'll see here that the price started moving down at the Sunday open last week and pretty much just ground down the rest of last week, and I think it will continue to do so. There is a bit of a structure point right here at 28,920 or so, right there. Now price could bounce down there and give me a nice long if I were to swing trade this. I would be pretty careful with this though, because the overall picture does look like it wants to go a bit lower. It's hard to say. There's a lot of data coming out, but that's what the algos say right now. Now, of course, the way I do things is I look for the bounce before I go long, or I look for the breakout to the downside before I go short. And if I were to go short, I would look for that breakout, wait until I had a slight pullback, grab that short, and I would be out well before this blue line here at the bottom, which is 27,159 or so, 27,170. I'd be out well before that if I were to take that short. And if that does happen, there's always that chance that it really falls pretty hard, but it really could do a lot of things. These are just some basic ideas of what can happen, and it's an interesting market so far. We have a lot of plumbing, a lot of market plumbing that is causing either hard moves up, hard moves down, and I think that the market is anticipating perhaps the summer being over, people coming back in September. We'll have to just see what happens. Let's take a look at Bitcoin. Bitcoin on a tear. A lot of this started when we started to see this plumbing that I just mentioned a moment ago, and that plumbing in this particular case, I believe, was the not year yield curve control. What I mean by that is, okay, I don't want to get too far into this, but when bonds become too expensive, right? When the yields become too high, when the rest of market participants fly to bonds for safety, and bonds have to increase their yield to get people to even buy the debt, that can be problematic because then we have to service that debt in the future. The rates get too high, borrowing money gets expensive, and a lot of things grind to a halt. So yield curve control, which is something that is done by fiscally more liberal governments, is where they sell short-term bonds to buy long-term bonds. So you're essentially cannibalizing short-term debt in order to buy that long-term debt and keep those yields down. That way there is somebody buying it, even though it's just the same people who are essentially issuing it, but then you don't have to hike the yields to attract in people to buy that debt. People will continue to buy that debt, sort of a facelift on bonds. And I don't want to get too deep into that because the bond market is rather confusing. But if you want to look it up, Besant essentially did this through the Treasury. That way we don't have to call it yield curve control, because if the Fed did it, it would be called yield curve control. And then all of a sudden we're communists and, we don't do that. Well, we do that. We just did it. We just did it by another name. And the market saw this and saw that as a lack of confidence in the entire system, and Bitcoin shot up really hard. Now, Bitcoin was due to shoot up very hard based on a technical look as well. Bitcoin had been heading down for a very long time, and it had been doing so since the top at 126,000 back in October, and it continued to head down, and at some point it was going to need to shoot up just like it did back here, right? And just like it did back here, all right? But this time it has shot up in an even stronger way, and this is something that happens every so often. However, I will say that the rate at which this shot up is pretty remarkable. It's a very strong move up, and this could be all of the above. It could be investors lacking confidence in the market because of this bond play game. It could also be a lot of short covering. It could also be a lot of manipulation, and it could also be a bull trap. Now, what a bull trap is to get a lot of people very excited in something. So a lot of retail gets in because they get FOMO, the fear of missing out. And then once price gets up nice and high, and certain very important people can sell their holdings so they're no longer underwater, all of a sudden price just dumps down. I'm not saying that's going to happen, but I am saying that I've been trading Bitcoin for 10 years, and this looks exactly like what that is. I've seen it a million times with Bitcoin. You get it nice and high, and Bitcoin investors tend to be less sophisticated than other investors. It just is what it is, and they get scared, and they panic buy, and they get left holding the bag. Now, there is another reason that this might happen. I'm not saying it's going to happen. Bitcoin could continue up, and the entire paradigm that we've always seen with Bitcoin is different. It's possible. However, there's another data point that makes it realistic where this might be a bull trap, and it's that right about this level, somewhere around the 75, 78,000, 80,000 level, there's a certain company called MicroStrategy, and they're no longer underwater, right? So under that level, roughly, I think it's around the 75, 78,000 level, MicroStrategy was deeply underwater with all the Bitcoin they had bought. Okay, and there are many companies who had followed suit with MicroStrategy because they have been right so far and for many years. Now price has gone up, and all of those companies now have a chance to offload their excess, and they could even go short to basically hedge against whatever positions they have. Not only do they have the ability to offload assets at this level that would leave them to where they're not losing money by holding them, they can also take the liquidity after that trade, and they can simply go short to hedge whatever is left in the market so that as price goes down, their balance sheet stays neutral. I'm not saying they're doing this. I'm saying it's quite probable that many of them are doing exactly this, not with all of their money, maybe not with most of their money, maybe with all of it. There's no way to know, but I'm telling you that there is a distinct possibility that this move up is happening to get very important people out of trouble. And when you see that, you then see a strong move down, right? Now, how many other companies have been purchasing Bitcoin? Oh, we've got all of the major companies. Now, they didn't buy a ton compared to the rest of their balance sheet, but still, if you're owning billions and billions and billions worth of Bitcoin, losing billions of dollars is never good on a balance sheet, even if you are BlackRock, iBitShares, all that stuff. So this very well could be exit liquidity, getting people out of the trade so that they can just go ahead, get themselves out of trouble, and leave the Moon Boys with the bag. I always lean towards that when I see things at this time, because the last thing I will leave you with is the fact that so far, out of the 3 halvings we can measure, it takes 400 days for Bitcoin to fall 75 to 85%. That means if this particular post-halving bear market follows that pattern, we should be seeing Bitcoin below 30,000 in October or November. Is it going to happen? No idea, but that's what it's done so far. Now, 3 data points does not a strong thesis make. However, it is the only data we have that is not nebulous, right? So there is that. I'd be very, very careful right now with Bitcoin. Let's take a look at USDCAD. Okay, so big move down. USDCAD is going to have some bullishness. I think it's going to need to reload a little bit before it heads up. Now, there is the possibility of getting a trade, a long trade, somewhere here, right? But I don't really have any strong structure on which I can rely to get that long. But there is that possibility of grabbing that long. It might be that I see it happen during a show, and I'm like, hey, this is where I think it's going to go up, and I grab the long, right? So I could get a long here, something like this, and I'm just picking a spot, right? And I'm not going to leave this up here because I don't know if it's going to change right there. I'm saying this is the general idea of what I think is going to happen, and that's how I would go along with that. But the only structure I do have on which I can rely is this level here at the top, which is 139.108. Going short there is something with which I'm pretty comfortable. If it does break above that, of course, I could go long. You're going to have some immediate structure above that, so it might limit the possibility of getting a very profitable long. Might just be a 2-to-1 or a 1.5-to-1, depending on how you do your stop losses. So that is a possible trade right there. Of course, the other trade I haven't marked on here is if for some reason we get a strong move down and there is some Canadian data coming out this week and US data coming out this week, then perhaps a bounce off the bottom might give us that opportunity to grab along at the bottom. So that is a possibility. I just don't know if price is going to make it all the way back down there, but we will see as this week happens. Now, where would I get out of this trade? That's really hard to say. If price were to head down right now, then we would have a nice convenient structure point, but we really don't know if price is going to do that. So we just kind of have to wait and see. So I will just leave this where it is. If I decide that I enter this trade, I will determine where I will get out at that time. Let's go ahead and take a look at the euro. The euro is kind of like the Aussie right now, not all that exciting. It's still bullish, but this move up does need to pull back, and it is pulling back, as you can see. So this move up right here is pulling back as we speak. I don't know that it will come to the bottom here. If it did come to the bottom, which that level is 116, 141, sure, I'd take a long there. I don't think it's going to happen, but it could happen, right? It's quite possible. I just don't think it's going to happen based on what I'm seeing in the algos, but it is what it is, right? So nice long possibility there. If price does make its way to this top right here, I would be careful with this trade going short around this level. I would be careful, and that level is 117, 115, but I would be looking at that as possible short. Let's go ahead and take a look at the Aussie. Same kind of story. The Aussie may well come down to this level right here, which I have marked with that blue line, and that is 0.71327 USD. So if the Aussie makes its way down there and bounces, a nice long could be possible. It may make its way to the top, and if it does, possibly a nice short. And that level is at 71,796, right? So possible short would be good there too. Of course, if there's a breakout to the upside, one could take that long. I just don't know that that's going to happen right now. The Aussie has been very bullish. It may want to go ahead and pull back. We're just going to have to see what happens. And especially with some of the data that comes out this week, it might be time for the dollar to turn around, grab a little strength, and start to flatten this out. We'll see. Let's take a look at gold and silver. Okay, gold and silver are on a tear. Gold in particular in this chart is pretty strong without a whole lot of structure to stop it on the way up. So gold could just run all the way up to 47.75 or so. Now price could come back down. One could take a short at that time. It might be the way to go. I would really have to be careful and look at the algos at that time. But with the strength I'm seeing in gold, I would almost wait for that breakout above that 47.75-ish level and take the long. And I would be out of it well before 48.93. That's what I would consider with gold, unless I could get a small pullback on the way up and grab a measured move and be out before 47.75. So something along these lines, if possible. But again, that would be a little tricky because I'm not relying so much on bigger structure. I'd be relying on local structure, and that's a little hard to predict on this chart here and now. Let's take a look at silver. Like gold, silver is very strong. I do expect this to flatten out, go sideways, and head back up. So there is that possibility of grabbing the long right here and looking for that move up. But again, I don't know where that's going to happen, so I'm not going to leave this on here. I'm going to take it back off, but that might be a nice long, and I would be out before this local structure at 71.87 or so if I took that long. In the meantime, again, just like gold, silver is very strong. I don't know that it's going to reject to the downside, so I probably would look for the breakout and then take that long just as you see it, and perhaps be out well before 77 up here. Again, a lot of this is going to have to do with some of that plumbing we talked about. Just going to have to be very careful with these moves. I generally don't trade gold and silver, but I know people who do, so I will leave it up here for everybody to see some possible trades. And this is what we do. We predict at Algo Factory where price is going to go, when it's going to get there, and how to extract money from these moves. And we teach people how to do this. If you want a preview of how that is done, take a look at the description. There is a free algo in there. It's a 15-minute video where I teach people how to build an algo. I literally build an algo before their very eyes, and I show people the tools that traders use to connect that algo to their broker so it can trade for them when they're not even sitting at the computer. Like I said before, you might be sleeping, you might be golfing, what have you. Now, of course, you do have to optimize that algo for your own trading style, whatever assets you're trading. So come to algofactory.tech and learn how we optimize before you were to use such an algo. Also, we are live Tuesday, Wednesday, Thursday, 8:30 a.m. EST. We're live for 10 or 15 minutes for the public to come in and ask questions. It might be that you want to know what your stock might do. It might be, hey, tell me what you think Bitcoin is going to do in the next 20, 30 minutes. Whatever it is, I can answer those questions. And then for the next hour or so, So about 45-50 minutes, I go into the private live lab for our private clients and we answer such questions for them. And then V the Gorilla often comes in and gives us some of his inside baseball on what he is learning with his boots on the ground in the crypto and precious metals business. Thanks for watching. We'll see you bright and early, 8:30 a.m. EST sharp.